Hitting an 800 credit score gives you immediate access to the lowest cost capital in the financial system. When you borrow money for a car or a home, the bank charges you an interest rate. In this elite tier, lenders offer their lowest available rates, which can reduce your monthly obligations by hundreds of dollars. You can reach this number while managing 21 different credit cards at the same time. We are going to set up your profile for this range right now. Open your banking app on your phone so you can adjust your settings as we go. Reaching an 800 doesn't require a high net worth. It requires an automated routine that satisfies the 5 mathematical rules of credit scoring. The first step is identifying your oldest credit account, ideally a card with no annual fee. This determines your length of credit history. Lenders look for decades of proven reliability, and a card you've held for 10 years provides exactly that evidence. Closing old accounts is a mistake that wipes out years of history. As the timeline shrinks, your score drops. A card with no annual fee costs nothing to maintain. Leaving it open ensures your credit history continues to age and stabilize your profile. Think of this oldest account as the anchor for your entire financial identity. This chart shows how your score is calculated. The largest factor, accounting for 35% of the total, is your payment history. Open your app settings and turn on autopay. Set it to pay the full statement balance every month. Carrying a balance and paying interest to a bank does not build credit. It only costs you money. You should treat the card like a debit card and pay the balance in full to avoid interest charges entirely. If you ever miss a payment by a few days, call the bank immediately. They will often waive the late fee and refrain from reporting the delay to the credit bureaus if you have a history of on-time payments. Automating your payments removes the risk of forgetfulness and secures the most important part of your score. This gauge shows credit utilization, the ratio of spending to total available credit. Using $10,000 of a $10,000 limit puts you at 100% utilization. When spending drops to $1,000, the gauge moves into the optimal green zone, signaling you are a low-risk borrower. Lenders view borrowers with maxed-out cards as people who are overextended and likely to default. This is the mathematical reason why having more credit cards can help. If you have a higher total limit across multiple cards, but your spending stays the same, your utilization ratio automatically drops. You can improve this metric by either spending less each month or by increasing the total amount of credit available to you. Now we focus on defense, which involves managing hard inquiries on your report. Your score takes a temporary hit every time you submit an application. Applying for several cards quickly suggests you are experiencing financial distress. You also want a mix of types of credit, such as credit cards combined with a car loan or a mortgage. These different accounts should be added naturally over several years rather than all at once. Spacing out your applications ensures your credit profile remains stable and attractive to banks when you need to borrow for a major purchase. The system is now in place. Your oldest card is active, your autopay is set to the full balance, and your utilization is in the green zone. From this point on, building credit is passive. The automated settings you just enabled will continue to strengthen your score every month without further intervention. In this tier, you become eligible for cards offering $1,000 sign-up bonuses and travel points that can cover the cost of international flights. An 800 credit score is the predictable result of a correctly configured financial system.